welcome back to the Forex Lounge Fundamental Extras. Today is Friday, July 2nd, 2010. Welcome back, one and all. Great you could join us. Today we read on Bloomberg.com private employers added fewer workers to payrolls in June than forecast, reinforcing concerns the recovery will weaken as Americans curtail spending. Employment at companies rose 83,000, less than the 110,000 gain forecast by economists in a Bloomberg News survey. Including government, payrolls fell for the first time this year because of a drop in the federal census workers. The jobless rate dropped to 9.5% from the 9.7% as the labor force shrank. The Labor Department reported today in Washington. Now, getting to the chart to see what this looks like, we see the blue line as the U.S. unemployment rate, again dropping to the 9.5% from 9.7%. It was actually forecast to rise to 9.8 from 9.7, but dropping below its own 12-month moving average, which is the violet line. The first time we've seen the U.S. unemployment rate below its 12-month moving average, going all the way back to 2007. Getting to the next chart now, we see the comparison between the U.S. unemployment rate, that's a violet line, to the blue line, that's a Dow Jones Industrial Average, on a monthly closing basis. Generally speaking, over time, as unemployment falls, the Dow tends to rise. And when the Dow falls, the unemployment tends to rise. Lately, we've seen unemployment skyrocket as the Dow has hit very significant lows. So far, the Dow lately has turned back to the downside. Unemployment has begun to fall. However, if we expect the Dow to rise, we would certainly hope to see and like to see the unemployment rate continue to fall to the downside. The drop today is a good beginning, but we need the unemployment rate to fall much further. Compare now the unemployment rate, that's the blue line, 9.5% as of today, to the dollar Swissy currency pair. Now, of course, there are two currencies within a pair. However, generally speaking, over time, as unemployment falls, the dollar Swissy tends to rise. As unemployment rises, the dollar Swissy tends to fall. This recent decline in unemployment leads us to believe that eventually we will see the dollar rise against the Swissy and other currencies as we expect the Federal Reserve will one day raise interest rates. However, in order for us to see the dollar really gain a good rally, we'd like to see unemployment drop much further. And finally, compare the Dow Jones Industrial Average, that's a blue line, to the dollar Swissy currency pair. Generally speaking, over time, we see when the Dow rises, the dollar tends to fall. When the dollar rises, the Dow tends to fall due to the very low interest rates. As capital moves into the Dow, it moves into higher yielding currencies away from the dollar. However, if we expect the dollar to rise, we would expect the Federal Reserve obviously to raise rates. We'd like to see unemployment fall much further. With that said, if you have any questions, do not hesitate. Email us anytime, info@forexlounge.com. We thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon. Back inside the Forex Lounge.